Hello guys, welcome back to my channel. And don't forget to like, comment, share, and subscribe. Russia may try to push greater volumes of a key oil product into Asia, possibly blending some with crude oil in a bid to find alternative markets as European sanctions tighten, according to VGA. Mauritian-made Natapa, a field primarily used to make plastics, is likely to hit into hubs such as Singapore and Fujairah from February when EU sanctions kick in, said Arman Ahraf, global head of natural gas liquids at the consultancy. Re-exports from the regions could become common as some buyers shy away from direct imports from Russia, he said in an interview. Moscow's invasion of Ukraine has caused turmoil across energy markets this year, and the disruption is set to extend into 2023. The European Union ban on mass flows of Russian crude will start in December, followed by a similar move against products including naphtha about 2 months later. While the Energy Information Administration expects Russian crude output will drop as a result of the curbs, local refineries will still need to find outlets for their naphtha. Russian naphtha export to Asia rose 84% in August to about 130,000 barrels a day compared with all of July, according to preliminary data by Vortex Ltd. That increase came despite weak regional conditions as local plastic markets. The key consumers struggle with thin margins and poor plastics demand from China. Softer gasoline margins are also eroding the demand for converting naphtha into gasoline blend stocks, further narrowing use. Reflection the toll conditions margins for making naphtha is in Asia are negative at minus 17 a barrel. In addition, prime time rates for the fall are in contango, a bearish starter that signals plentiful term supply. Russian naphtha may already have been blended into the country's large crude and shipped to India earlier this year, according to Ashraf. The blending of heavy foreigner naphtha or heavy naphtha in limited quantities could reap much more benefit versus selling the naphtha cargo directly, he said. Oil prices surged by nearly 4% on Tuesday after Saudi Arabia floated the idea of OPEC output cuts to support price in the case of returning Iranian crude and with the prospect of a drop in U.S. inventories. U.S. crude inventory fell by more than expected last week, the AP reported Thursday at a time when many are mulling the prospect of production cuts from major oil producers. West Texas Intermediate, the U.S. benchmark, traded at 93 a barrel following the report after settling up 3% at 93 a barrel. U.S. crude inventories fell by 5 million barrels for the week ended August 19. That compared with a drop of 44 barrels reported by the AP for the previous week. Economists were expecting a decline of about 3 million barrels. The AP data also showed the gasoline inventories rose by 26 barrels last week. The distillate stocks increased by 1 million barrels. The official government inventory report due Wednesday is expected to show weekly U.S. crude supplies fell by about 93 barrels last week. Oil prices rallied on Wednesday after Saudi Energy Minister bin Salman touted the prospect of production cuts by major oil producers to boost prices. The remarks from the Saudi Energy Minister bin Salman possible signal that the kingdom is preparing for the prospect of the U.S. agreeing to a renewal of the nuclear agreement with Iran, tariffs allowing the latter to return to the oil market, Commerce Bank said in a note. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share and subscribe. Thank you.